Introduction of Wakala. Its literal meaning is looking after, protection, or taking custody. The word wakiyo is derived of it, and it means agent. An agent is a person who establishes contractual and commercial relations between the principal and the third party. So, legally, Wakala or agency agreement refers to a contract where a person authorizes another to do a certain well-defined legal action on his behalf. Its basic elements are agreement, subject matter, principal, and agent. Agency agreement. It is widely used in Islamic finance, where a representative is appointed to undertake transactions on another person's behalf. The agency law is to facilitate economic exchanges where they are hindered by distance, size, and numbers, or where the principal is unable or unwilling to act personally. The mechanism of Wakala. Principal appoints an agent to carry out a certain well-defined action as a representative. The agent performs the task according to the instructions. The agent is then entitled to receive a predetermined fee, irrespective of whether the accomplished task satisfied the principal or not. The conditions of Wakala. The agent should also be a competent person. The principal should have the power and competence to deal. For example, an insane or a minor cannot appoint agents. And the act should be known and must be lawful. Agency and other legal relations. The seller is the agent. In murabaha, the buyer asks the seller to obtain goods which the seller may not possess, so in this case the seller will become an agent of the buyer to obtain the goods. Middleman or seller. It is also possible that a person apparently acting as a middleman is not an agent but a seller. For instance, that person is obtaining goods from the manufacturer and selling it to customers. Agents or employee. An employee is a person who is completely subject to the control of his employer, but an agent is given authority to perform a certain transaction. Types of Wakala. Particular Wakala or special agency. This agreement is made for a certain known transaction. For example, the agent is bound to sell or buy a particular house or car. General Wakala. It is a general delegation of power. For example, the principal asks an agent to buy a 4-bedroom house. Restricted agency, where an agent acts within certain conditions. For example, buy the house on a certain price and in a given time. And absolute agency, where no condition is put for the transaction. For example, no specific price or time is given to the agent. The role of an agent. It includes delivery of the subject matter, claiming the price, exercise of the right of option of defect, inspection and returning of goods. The contract can be invoked for sale and purchase, letting and hiring, borrowing and lending, assignment of debt, guarantee, pledge, gifts, bailment, taking and making payments, marriage and divorce, litigation and relinquishment, admission and acknowledgement of rights. Wakalah-ul-Esthesmar. It is an agency for management of funds, and it's commonly used in Islamic finance. Practically, Islamic financial institutions can manage the funds of investors under this agency without taking any risk of the project or exposure risk of the client. In return for undertaking investment services, the Islamic financial institutions are paid a pre-agreed agency fee under Wakala agreement, on the basis of sharing in profit and loss in the investment. This fee may be a lump sum, or monthly, or an annual in percentage of investment. For example, it may be agreed that management will get 2% or 3% of the net asset value of the fund from the client every year. Applications of Wakala. It is used by Islamic financial institutions in almost all modes like murabaha, salam, istisna, ijara, and diminishing mushaka, and activities like letter of credit, payment and collection of bills, fund management, and securitization. Wakala may also be commutative and non-commutative.